From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 15th, 2015. In just a moment, we'll be taking a look at the NZDUSD, the New Zealand dollar versus the US dollar for today's analysis. But first, I want to recap a couple of the trade suggestions from yesterday's live trade room. Starting here on the GBPUSD, Great British Pound versus the US dollar, we've been studying this long-term trend channel. You can see the red trend line at the top, the black trend line at the bottom. And of course, over the past few days, we have been challenging and testing the top of that trend channel towards the red trend line. We can see multiple challenges along each of those times where you see the red circle. You see 1, 2, 3, 4, and now the fifth time challenging that zone, and so far a failure to break out and continue to pressure higher. So that gives us some expectation. If the pattern of the trend continues, we're looking for some resistance and clues to reversal for us to take this on back down again. As we can see, that's the pattern of the trend. Of course, fundamentally, with our interest rate news tomorrow, if they indeed do change the interest rates, that should be a boost for the US dollar, and that would likely send us back lower again. Of course, the risk there is that they don't change the interest rates and there's a sell-off of the US dollar and it turns back higher and breaks through there. But if you're using appropriate risk strategies, that shouldn't be a problem. Let's go ahead and take this down to the 4-hour time frame. Right here on the right-hand side where the red circle is, we can see a couple of times coming into here as resistance into this orange shaded area. I'm going to see if I can get this red circle selected here so I can widen it out just a little bit so we can see the fact that we have come up into this orange shaded area the first time, second time, and third time. The second time, making a little bit of an attempt, it was a failed breakout, and then we see it pushing back in underneath. So it was a fail to move higher, and now we're back underneath. We could even interpret this as a head and shoulders pattern with the shoulder on the left-hand side of the high and the shoulder on the right-hand side of the high, which would be the head level. And we could interpret this as a head and shoulders pattern, potential failure of breaking out of the trend line, and we would then look for it to continue to pressure lower down from there. So you can see the orange shaded area, 5175 to 5200, is the main area that you want to focus in on as your potential selling opportunities for the pound dollar. I'm in it at 1.5175. Of course, we have locked break even or better. Can't lose on the trade at this point, but definitely watching for new opportunities. We would like to see it break down underneath the blue shaded area, which is currently acting as our support zone. That would be your first target, by the way, if you are in that trade into the 51.25 level. Let's go ahead and zoom it in one more time. Measure from the orange shaded area where we got in, 51.75, to the bottom of today's candle. You can see we've seen about 40 pips of profit on the trade. So we've seen about 40 pips of profit. It's come back up a little bit. We're definitely targeting back down here towards the blue zone. And of course, beyond there, we'll look for lower for the pound dollar. Another trade that we've been following is the AUD-USD, the Australian versus the US dollar. Here, again, if we go out to the weekly time frame, we can see the long-term downtrend. We can see the red trend line here down here at the bottom, signifying somewhat of a triangle-shaped pattern here for the Australian dollar. Back down to the daily time frame, we've been studying that over the past several days. Again, we saw a resistance high, a new high made up into the purple zone in the red trend line, a new high down here on the right-hand side that has failed to reach that last high, and now we're finding resistance here underneath the 72.65 or so level, the yellow shaded area here on the chart. Zoom it in one time on the daily time frame. So the expectation yesterday and with the discussion we had was as long as it did not break above that yellow zone, there would be an opportunity to go short and target back down towards the orange shaded area down here into the 71.90 level or lower. If it breaks through there, we could even see it back down to the bottom of the triangle and the 7100 level. So that's the main focus. If it breaks above the yellow zone, of course, all that changes, and we likely look for a challenge of the last high all the way up here into the mid 7300s back towards the purple shaded area. So that was the discussion and the trade entry. Down here you can see at the bottom 72.45 was the trade entry right at the bottom of our yellow shaded area, currently sitting about 10 pips of profit. Let's go ahead and take it down to the 4-hour time frame. Had to endure a little bit of a push through the yellow zone, now coming back down in our favor, sitting about 10 or 11 pips of profit. Again, the target is the orange shaded area, 7200, 7190. That's what we're looking for as profit on this trade. Of course, any further down would be more profit on the trade. We'll look to close some of the trade as it hits down here into the orange zone. A break above the yellow zone, of course, is the risk, and then we would look to get out of the trade. But Another 10 pips or so, we'll have the opportunity to go break even and protect the trade from going negative here on the Australian dollar. All right, moving on to the NZD. Of course, here, this is the weekly time frame. We can see the long-term trend line. That's important for today's analysis. Keep in mind that red trend line coming down from the highest high on the chart back in 2014. We can see the middle of that trend line where the market hit is early part of 2015. So this trend line has been in place for a long time. You see the blue trend line right here in the middle where it took a little bit of a hop up into that middle and then fell back down. We're in a little bit of an uptrend phase also, challenging towards that red trend line. Down to the daily time frame starts to get a little clearer. We see where the red trend line is. We see the rise that we've been in over the past several months. Rising into that red trend line gives us a clue that this could be potential resistance for the New Zealand dollar. Of course, fundamentally, it makes sense that this should be going down because we had the cut of interest rates out of New Zealand last week. This week, we anticipate a raise of interest rates in the U.S., which all of that should imply fundamentally that this should be going down, and we're looking for targets much lower. Of course, tomorrow, the highly anticipated volatility could be quite dangerous if you're not using appropriate risk strategies. If it spikes higher before going back down, keep in mind that is a possibility, but a straight fundamental move we could see with strengthening of the U.S. dollar, this moving back down and possibly making a new low. I think most interesting to me is how it's challenging into that weekly trend line. You can see here, I'm going to take this off for a moment, you can see the last resistance high where the red circle is, the last low that we see down here at the bottom of the chart. Fibonacci high down to low, 786 sits at 67.96. The 886 just above the blue shaded area. So the blue zone is where the 786 lives. That's of this previous downtrend. Potential reversal point here, right there at the red trend line. So all of that tells me between 67.95 and 68.25, the blue shaded area, for me, today will be a selling opportunity to go short, looking for the market to start turning in the anticipated direction of the fundamental move on interest rate news tomorrow. We do have a little bit of U.S. news today coming up at 8:30 a.m. Eastern U.S. time. If it's at all positive for the U.S., we would likely start to see this take a turn back lower here for the New Zealand dollar. A breakout above the red trend line, a breakout above 68.50, but probably more importantly, that last resistance high over there on the left-hand side will likely see this continue to pressure higher. Fundamentally, of course, it makes sense to be looking for a sell here on this currency pair. You can see we have a little bit of a price structure here that shows that the buyers are a little bit hesitant to take this much higher. You can see the market challenging here into the 67.95 level, here just holding around. Attempted, the sellers come back in, drive it back down into 67.95. That could be our clue that the sellers are starting to fight back a little bit, and if they do take control of the currency pair, we're back down to the mid 6700s, the pink shaded area, or beyond there. We look for it even further back down, possibly a change of the trending pattern that we've seen over the past several days here for the New Zealand dollar. So bringing up our trade window again. If you look down here, I am in at 67.95, looking for the market to start turning back down. Stop loss will be about 50 to 60 pips higher than the current market price. So if I'm in at 67.95, we're looking at the 68.50 to 55 level as your stop loss for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.